Thank you, Rowena. So I'm going to focus entirely on the Conservative and Labour Party manifestos, and I'm going to talk you through what we think their plans imply for tax revenues in total, spending in total, and therefore borrowing and debt, and then assess the extent to which they would or wouldn't be meeting the fiscal targets that they've chosen to set themselves. So I'm going to start with tax, and I think it's an important piece of context here is that if the new Chancellor after the election, whoever he or she was, decided not to do any tax policies in any budget in the next Parliament, there are already some measures in the pipeline that we estimate would boost revenues by about £5 billion in 21-22 relative to the last financial year. So there's a whole load of those, but in particular they include the dividend tax rise and the increase in council tax that's been earmarked for social care. In the Conservative manifesto, there's no specific tax rises spelt out, although there is a stated intent to carry out measures to reduce avoidance. And on the tax cutting side, they've said that they will increase the personal allowance and the higher rate threshold, as Rob talked about, and in 21-22 that would reduce revenues by about £2 billion. So under the Conservatives, you'd see tax cuts being announced in the next Parliament that would offset part of the tax rise that's already cooked in. So you'd see the tax system becoming slightly harsher over the next Parliament. Under Labour, well, of course, a Labour Chancellor would inherit the same measures in the pipeline, ones that are costed at boosting revenue by £5 billion. Their manifesto doesn't contain any significant tax cuts, but it does contain the significant tax rises that Rob talked you through. Labour have scored that at £49 billion worth of revenue. That's £52 billion in total, less a £3 billion margin to allow for any additional behavioural change and uncertainty around the costings. Now, we drop in our calculations £11 billion out of the 52 that Labour has. And that's for three main reasons. Firstly, an error made by Labour in the costing of their avoidance package. Secondly, we think a better central estimate of how much the excessive pay levy and how much the offshore company property levy will raise is close to £0. And we have a lower central estimate, as Rob described, of how much revenue you might get from their income tax rises targeted at those on very high incomes. So that might point you to a central estimate of £41 billion, 52 minus the 11. We think that even £41 billion would be very generous given the downside risk of other policies. So it would still require the tax avoidance programme, the extension of stamp duty to derivatives, and the review of corporate tax reliefs, which is not specified yet, to deliver £13 billion of tax revenue. And in addition, we think that the rise in corporation tax that Labour proposes, the rate of corporation tax, might get the £19 billion in 21-22 that they want, but it won't raise that much in the longer term. But going forwards and everything else I'm going to present, we're going to assume that Labour's Labour's tax measures would increase tax significantly by the £41 billion number, not the 49 that's contained in their manifesto. So where would that leave the tax burden as a share of GDP? Well, if we start with the total amount of receipts that government receives, we can see that as a share of our economy, that's been edging up in recent years. And under Conservatives, it would continue to grow. So the tax burden would continue to rise, in part because of those pre-announced measures that the new Chancellor would inherit. Under Labour, you'd see the tax burden rise more quickly. And if we put in history, we can see that under the Conservatives, this measure of total receipts going into the government would be at their highest level since 1986-87. Under Labour, they would be at their highest level since 1984-85. An alternative measure of the tax burden is to look just at tax receipts. So instead of looking at the total amount of money going into government, you look at just the revenue they get from taxes. So this excludes interest income, profits of nationalised corporations, and other such non-tax income. And you can see that that used to be much more significant in the 1960s and 70s and 80s when the state was very different to what it is now. So under the Conservatives' plan, the tax burden on this measure would edge up. It would actually be slightly above the peak achieved in the 1980s and therefore would actually reach its highest level since 1969-70. Under Labour, it would surpass the 1969-70 peak and would reach its highest level since 1949-50. So where would this leave us internationally? Well, this graph is taking IMF data on all advanced economies. Don't try and read the scale on the left. I've ranked the countries from the highest tax as a share of GDP at the top to the lowest tax as a share of GDP at the bottom. So you've got Finland at the top and Hong Kong at the bottom. The G7, the very large economies, in dark green. The UK's position in 2017 in black. So under the Conservative plans, the tax burden in the UK would rise slightly. Our position in this league table would not change. Under Labour, the tax burden would increase significantly, and it would put us in a mid-table position by international standards. So I'll now turn to public spending, and I'm going to start with benefit spending. New Chancellor would inherit measures in the pipeline which are set to cut benefit spending by about £11 billion in 21-22 relative to the last financial year, and actually cut spending by more than that in the longer term. And the vast bulk of those cuts would come from working age families. Under the Conservatives, they've said that they will means test the winter fuel allowance, but they haven't told us how. We spend about £2 billion on the winter fuel allowance at the moment. We're going to assume that they will cut that to £1 billion. They will halve spending on it. We don't know if that's the case. They've also said that they will replace the triple lock with the double lock from April 2020 for the state pension indexation. And over the coming Parliament, that's forecast to make no difference at all, either to the level of the state pension or how much we spend on it. I will come back to this issue for the longer term at the end of this presentation. Labour have said that they would increase some benefits that are mostly targeted at working age families, and that would cost £4 billion in 21-22. So you can see similar conclusion to what you saw from Rob's talk. Conservatives adding slightly to the benefit cuts that are already in place, Labour offsetting some of them. So that's benefit spending done. What about public services? Well, the plans that the new government would inherit imply spending as a share of national income on public services falling over the next few years, such that in 21-22, if you wanted it not to fall as a share of GDP between now and then, you'd have to top those spending plans up by £17 billion. So in 21-22, the size of the state as measured by public service spending as a share of the economy is £17 billion lower than it would be if we decided to keep it constant. And that £17 billion can be decomposed into a £27 billion takeaway from cutting day-to-day spending alongside a £10 billion boost to investment spending. Philip Hammond announced an increase in investment spending in the last autumn statement. Under the Conservatives, it seems to us that the manifesto commitments for increases to spending on schools, NHS, social care suggest that they'll perhaps leave overall spending broadly unchanged from the March budget. So while they would increase spending in real terms on schools and the NHS over the next few years, that looks completely consistent with the plan set out in the budget, which already had spending growing over the next couple of years, in particular on those areas, and had a settlement for total public spending, which would allow some growth in the NHS and schools budgets beyond that. So we don't think that the Conservative manifesto has actually added to total public spending in 21-22 relative to a reading of the March budget. Labour would make some big changes. Day-to-day public service spending would increase. Labour has scored this at an increase of £44 billion. We're going to take an estimate of £46 billion because we think the cost of abolishing tuition fees is a couple of £1 billion greater, as Rowena described. And in terms of capital spending, Labour has said that they would do this large boost to infrastructure spending, £250 billion over 10 years. We don't know the profile of that. We're going to assume £12.5 billion extra in the current financial year and then £25 billion a year thereafter. So now showing you how this would leave public spending as a share of our economy in terms of recent and longer term history. So this is total public spending as a share of GDP. It shot up quickly during the financial crisis and associated recession. It's been falling since then as the coalition government and then the Conservatives have been cutting it back. Under the Conservative plans, we think that public spending would continue falling as a share of GDP, albeit at a slightly slower rate than it has done over the last 7 years. Under Labour's, public spending would grow as a share of national income, such that by 21-22, there's a very big difference between the two parties. The difference is about 3.5% of GDP, or £81 billion in that year's prices. How does this compare to history? Well, the Conservatives would be cutting public spending back to its lowest level since 2004-05, whereas Labour would be increasing it to, in terms of pre-crisis history, to its highest level since 1984-05. How would we compare internationally? Well, I've got the same set of countries here, but now I'm ranking them by how much they spend as a share of national income. So we've got France, the biggest spender at the top, down to Hong Kong, the smallest spender at the bottom. Again, G7 economies in green, the UK in black. Under the Conservatives, public spending as a share of GDP would fall, so we would move down this league table of big spenders. Under Labour, public spending would increase as a share of GDP, so we would move up, and we would move up again to about a mid-table position. We would be at Canadian, not Scandinavian levels in terms of the size of our state. So what about the effect of these spending proposals on the economy? Well, what we've done here is essentially for Labour's additional infrastructure spending, we've used OBR estimates of the multiplier to say that when Labour increases infrastructure spending, it would boost GDP, and therefore you'd get some of that money back in additional tax receipts in the near term. So the OBR's multiplier for year 1 is 1. That means that if you increase infrastructure spending by £25 billion, you get an economy that's £25 billion bigger, and some of that will be taxed. But that's only a near-term effect. Under the OBR's assumptions, that multiplier fades over time, and therefore this boost to GDP and therefore the boost to tax receipts is only temporary. On the supply side, Labour's significant increase in infrastructure spending would, if they spent it well, boost the productive capacity of the economy. You'd end up with higher growth over the longer term. However, Labour's increased labour market regulations, such as the higher minimum wage, would have the opposite effect. So this graph now is showing you the proportion of employees that were paid the minimum wage in 2017, and that was already a significant increase over a couple of years earlier. So you can see about 9% of employees aged 18 and over paid the national living wage in 2017. The Conservatives have proposed a significant increase in the national living wage over the next few years, the impact of which is already put into the OBR's forecasts, and that would increase the proportion of employees who were paid that amount. And that increases for those aged 25 and over. That's whom the group that the national living wage under the Conservative applies. Labour have said that they would introduce a £10 an hour living wage by 2020, and they would apply to all individuals aged 18 and over. So we estimate this is the proportion of employees that would be paid at the minimum wage under that policy. So if you take all individuals aged 18 and over, you'd be moving to a situation where over a quarter were having their wages set by Whitehall. If you look just at the 18 to 24-year-old group, the group that tends to have lower hourly wages, allowing them to have a £10 an hour minimum wage would mean that 60% of them would have their wages set by Whitehall. It would take a significant risk with their employment prospects. In addition, in Labour's manifesto, we would get to have 4 additional bank holidays a year. That's very nice to have, but it wouldn't be cost-free. And in addition, Labour's higher rate of corporation tax would, as Rob set out over the longer term, expect us to lead investment to be lower than it otherwise would be, again, harming the economy. Under the Conservatives, they have a commitment to reduce net immigration, which, if they delivered it, would also weaken growth and the public finances. So in terms of this, for the longer term, in terms of the productive capacity of the economy, we assume no effect of either party's policies. We're taking the OBR's forecast for the productive potential in the economy as unchanged from the March budget. And this is setting out our reasons for doing that. Okay, so this moves us on to the objective for reducing the deficit. So we start with the current government's plans. Well, the current Conservative government had committed in their last manifesto to eliminate the deficit by 2018-19, and that's now highly unlikely to happen. And in the autumn statement, Mr Hammond pushed that back to be as soon as possible in the next Parliament. And the forecast he produced back in March implied that you'd need further fiscal action to achieve this. The new manifesto the Conservatives have produced says that they want a balanced budget by the middle of the next decade. So that's not in the next Parliament, and it's certainly not as soon as possible in the next Parliament. So the target date has been pushed back even further, and perhaps this implies that we'll now be getting to have 15 years of austerity starting in 2010 and running through to 2025. Under Labour, they've said they want to eliminate the deficit on day-to-day spending within 5 years. So they're saying they're happy to borrow to invest, but what government spends on day-to-day activities they want to be covering by tax revenues, and they're going to aim to do that at a 5-year horizon. Now, a forward-looking target for the current budget does have much to commend it. I would say that because it was recommended in successive IFS Green budgets in the 2000s. It was then adopted by George Osborne in 2010 and by Ed Balls in 2015. So a forward-looking target on the current budget has many nice features. Of course, you don't have to aim to have an exact balance. You could aim to have a surplus if you wanted to be more austere than what a balanced budget would imply. So what do our estimates imply for the outlook for the deficit under the Conservatives and under Labour? So under the Conservatives, the deficit would rise between last year and this year, as indeed it does in the March budget forecast. It would then fall over the following 2 years and then stabilise at about 1% of GDP. Under Labour, it would increase more quickly in the current financial year. It would then fall over the following 2 years before stabilising at about 2.5% of GDP, slightly below the level we had in the last financial year. So in the last year of the next Parliament, the deficit under these estimates would be £21 billion under the Conservatives, so some way off getting the budget balance by 2025 that they want. And under Labour, it would be considerably higher at £58 billion. Now, of course, Labour's deficit, part of that is explained by the additional capital spending that they would be doing, and they've said they're happy to borrow to pay for that. So what happens if we look at the current budget and we exclude borrowing that's explained by investment spending? Well, under the Conservatives, the current budget was strengthened between the current financial year and 2019-20, and then it would strengthen at a slightly reduced rate thereafter. Under Labour, you see a very, very similar pattern. Their current budget would be in a weaker position in all years because we're assuming they don't get the tax revenues that they expect from their plans. But under both parties, you'd move into a budget surplus on the current budget in 2019-20. So Labour would meet its target with about £21 billion to spare. That's the level of the current budget surplus they would have at the end of the Parliament. So what about debt? Well, the current government had a target to have debt falling as a share of national income in every single year of the current Parliament. That target has already been missed, and Philip Hammond revised that to having debt falling as a share of GDP in 2020-21. And in the budget, they forecast that this fiscal target would be on course to be met with some room to spare. In the Conservative manifesto, there doesn't seem to be any debt target specified. Labour, however, have said that as a share of national income, they would ensure that national debt is lower at the end of the Parliament than it is today. Now, there are very good reasons with debt at its current high level to want it to fall over the longer term. It's much less clear that it really has to be lower in 21-22 than it happened to be in 2016-17. So under our estimates, debt as a share of national income would rise between last year and this year, and then fall slowly and then slightly more quickly under the Conservatives. Under Labour, it would stabilise for a couple of years before falling back, and Labour would be on course to meet their target just. So debt at the end of this Parliament would be slightly lower than it was at the start. The difference in 21-22 between the two parties is quite sizable because of all the extra investment spending we would have under Labour, as well as the shortfall in tax receipts. That means that we'd have debt at about 4.25% of GDP higher, or about £106 billion. So Labour will be on course to meet their second fiscal rule, debt lower at the end of the Parliament than at the start. But it's important to note that debt is being increased and then reduced because of some loans that the Bank of England has been making to the financial sector, which are being repaid. They're being made on a 2-year basis, and therefore we're expecting to get the money back pretty quickly. So it adds to debt when we're making the loans, it reduces the debt when we get it back. If we strip that out and ignore that financial intervention, we would see that debt would fall more gradually under the Conservatives, but under Labour it wouldn't fall at all, and in fact they'd be on course to miss their fiscal target. So one of the driving factors around them meeting their target is because of the inclusion of these loans in debt that we very much hope to be repaid in the next couple of years. So the headline conclusion there is that debt would fall as a share of GDP under Labour, and you might ask the question, well, would that really be the case? And it's because actually you can have a substantial increase in the outlook for borrowing and still have debt fall as a share of national income. So we think that if you had all of Labour's day-to-day spending increases and you spent £25 billion a year on infrastructure, you'd only need £30 billion a year in tax rises and still be on course for debt to fall as a share of GDP. So because we're costing their measures in our calculations at least at £41 billion, that gives them some headroom. So that's explaining why debt is falling. But of course in Labour's manifesto they propose nationalisation of Royal Mail, and they want to have in every region of England publicly owned companies operating in rail, energy and water. And doing that would certainly add to public sector net debt. And so therefore, depending on the scale and the timing of Labour's nationalisation programme, it could lead to Labour being on course to breach its target. But in some ways that just shows how odd it is to target public sector net debt, and in particular to target in 2 years. We would have more debt. The public sector would also have greater assets as well. So it would have more debt, but more physical assets. the financial health of the public sector wouldn't necessarily be any worse, just as privatisation doesn't make the health of the public finances any better. If you sell an asset for what it's worth, you're not really making the public finances stronger. If you buy an asset for what it's worth, you're not making them any weaker. What matters with the nationalisation programme is not really what it does to public sector net debt, it's whether you think these assets, whether you think these organisations would be better managed if they were to be operated in the public sector or the private sector. That's what will matter for the economy and our ultimate living standards that we get to enjoy. So finally, before I conclude, I want to talk about the long-run public finances. We have an ageing population. This adds considerable pressures to the public finances, and one of those pressures comes from state pension spending. And the OBR in January produced a projection for spending on the state pension, assuming that the triple lock remained in place. And it shows that state pension spending would increase quite significantly as a share of national income over the next 50 years, an increase of about 2% of GDP. Now, those wiggles down are when the state pension age is forecast or assumed by the OBR to rise. So it goes up to 66 by October 2020, then it goes to 67, then 68, and then 69 in the mid-2050s, keeping the proportion of adult life spent aged over the state pension age roughly constant. An alternative way to index the state pension would be to increase it in line with average earnings. That would mean that the living standards of pensioners were keeping pace with those of the average worker. It's also something which would be, you can't do more than that over the very long run anyway. And you can see that even under this scenario, state pension spending would grow as a share of GDP, but we'd kind of halve that increase. You'd be talking of an increase of about 1% of GDP instead of an increase of about 2% of GDP. So half of the public finance problem we have on the state pension is actually explained by the triple lock. Now, the triple lock says that you increase the state pension each year by the greater of earnings or prices or 2.5. The Conservatives have said that from 2020 they will drop the 2.5 and just increase the state pension by the greater of prices or earnings. So that means that over the very long run, the state pension would be a bit less generous. It means we'd be spending a bit less, but not much less. It doesn't make that much difference, and that's because it's pretty rare for both earnings and prices to grow by less than 2.5% in the same year. So the Conservative proposal here wouldn't make much difference to the long-run public finances. The Labour Party manifesto suggests, and a subsequent press release commits them to not increasing the state pension age beyond 66. So it would reach 66 in October 2020 and then not increase thereafter. If they were to do that, and they were to keep the triple lock as well, then state pension spending would increase very significantly over the next 50 years, reaching over 8.5% of national income, or projected to reach over 8.5% of national income on our calculations by the middle of the 2060s. So a policy that will be much more expensive and make the challenges of an ageing population much more difficult for subsequent chancellors. So to conclude, the Conservatives have set out relatively modest changes relative to current government policy. Under the Conservatives, you'd get a rise in the tax burden and you'd get day-to-day spending cuts. Eliminating the deficit would be pushed back into the Parliament after next, and the long-run challenge to the public finances would remain significant. If they were to meet their immigration target, you'd get weaker growth and you'd weaken the public finances further. Under Labour, you get a big increase in the size and the shape of the state. They propose very large increases in tax, borrowing maintained at around its current level in order to finance a large increase in spending, in particular on infrastructure. And there are particularly big downside risks with Labour's plan. The tax measures are unlikely to raise anything like the £49 billion that Labour wants, particularly over the longer term. Despite the increase in infrastructure spending, the productive capacity of the economy could be harmed by proposals such as increased national living wage. And not increasing the state pension age beyond 66 would make the long-run public finance challenge even harder to meet. Thank you. So we'll now stop for questions.